The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 13th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs. How about this, folks? Think about this. If you, no matter what's going on in your life, good, bad, indifferent, if you knew that everything was going to turn out okay, how would you live your life differently today? What a great way to, in my opinion, a great approach to be able to take a look at things. If you knew everything was going to turn out okay, how would you live your life differently today? In fact, you got to ask yourself the question, why wouldn't you live your life differently if you knew everything was going to turn out today? You know, the question for each of us, it's not what would we do if we had the means or the time or the influence and the educational advantages. The question is, what will we do with the things we have? Because you do have an amazing power within yourself, folks. Let's go check out the amazing power of these markets here. Right now, Dow is off 72 points. It's trading out at 15,677. S&P down about 4.5 points, trading at 1763. The composite down 9 points, trading at 39.10. Russell 2000 off $1.80, trading out at 10.99. Cena Corp to the upside, that's the leader, up $7.50. Pioneer Natural Resources up $6.40. ARC Group up $6 and change. Pegasystems, that's up $5.33. Puma Biotech, that's up $4.82. Potbelly up $4. Kihu 360 Technology, that's up $4.25. Google's up $3 and change. Macy's up $3 and change out here. To the downside, lead the charge is Regeneron Pharmaceuticals. It's off $10, nearly 3.5% this morning. Volume behind that move didn't look to be too bad. ITC Holdings off $5. Ellis Perry, PERY is the ticker symbol. They're getting hit and hammered hard today. Down 22% right now. That's off $4.30. Mark West Energy Partners down about 5% off $3.90. Frank's International off 12%. Netflix down $3 and change. Icon Enterprises off $3. X1 XONE down about 5%. Our call number 877-927-6648. If you give us a call, folks, would love to hear from you. Let's start off by taking a look at the indexes. Let's see what we've got going on here. Number one, we've got the oscillator, both the volume and the price oscillator, well below the zero line out here. That says that the New York Stock Exchange has been giving us the signals all along that things aren't right under the covers out here. What does that set up? Well, it sets up a move lower, and that move lower, you know, has been showing, I have shown you a few times. Number one, the New York Stock Exchange make a nice three drive to a top pattern. That's the blue shaded in pattern that you're looking at on the daily chart. Not only was it a nice three drive to a top pattern, but gave you a great confirming signal out here. That confirming signal coming in on the trading session of October 30th, bearish engulfing, key reversal session, everything that you need. Now the pullback here has been pretty mild. A lot milder than one would have expected out here. Has not even made the 0.382 retracement. All that we have seen thus far, this was coming into last Friday, where we saw a significant bounce in the marketplace out here, came down and tested the area of old resistance where it broke out of, which was a September 18th level. That was about 99.06. What we should see out here inside the New York Stock Exchange is a pullback all the way down to the May 22nd high, 96.95. That's where I'm looking for this to move down to inside of the markets, and I expect that we'll see this here coming in on Friday or Monday of next week. that ought to go ahead and push the oscillators down to areas where we would get to what will be called a extremely oversold condition. Then we'll see if we're just simply going to form the B to a C of another larger A to B equals CD down. But I expect that we will see that move coming in over the course of the next couple of days out here. If you take a look at what's going on around the world, stock chart wise, you've got the FTSE's off 1.5%. We'll take a look at that. The DAX is down 0.6%. Asia was all red last night out here. I suspect that we'll see the same thing here inside of our marketplace. We just saw a nice little counter trend rally this morning that was just doing nothing more than working off the oversold condition out there. If you didn't get a chance to catch the first hour of the show, go listen to the archive. It is on Channel 9 out there in the marketplace. So that's what the NYSE is signaling to us. It's signaling that the bears have firm control of the marketplace. If we look at the S&P 500, not a lot of damage here being done since that key reversal session on Thursday, November the 7th out there. Pullbacks also have not been that. So I'm going to get rid of the A to B equals C, the up pattern. That just maybe confuse you. Now let's just take a look at retracement levels. We'll see it has not done the 0.382 retracement. I would suspect the 1726 would be its target. That is nothing more than a dead cat bounce, a 0.382 retracement out there. That's trading at 1763 right now. So that move would be, 30, 40, about 30 points, a little over 30 points out there. 35 to 40 points is as far as a move further south inside of the S&P 500. I suspect that is what we are going to take a look at and see unravel here over the course of the next few days. If we take a look at the Dow out here, the Dow, has really been relatively strong. I don't think on this pullback here we're going to see the Dow make its way all the way back down to the bottom of that 1,000-point consolidation range. What I would expect that we would see is the Dow move down to at least the dead cat bounce, 15,385. Maybe he gets all the way down to 15,131 out there. That would be nice. That would be a normal, natural a normal, natural move out there. The 0.618 area coming right into that nice wide-ranging bar from October the 10th, the high of which is 15,126, and the 0.618 retracement 15,131. It looks to me like that's really what the Dow's target is on this market pullback out there. If we take a look at the Russell 2000, this thing here as not actually acting too badly here right now for something that had shown the initial weakness inside of the marketplace. Almost completed an A to B equals CD down. Right now it is off only 1.5 points, so it is the leader when it comes to weakness on the way down out here. So it's not acting as weak as the others. I do suspect that what we'll see is a move down to about the, at least the August 5th high, 1063 out there. That's just slightly below the 0.618 retracement. We'll see how volume behaves on the move down out here. We'll take a look at the IWM here shortly. That's what's going on inside the Russell 2000. In the NASDAQ composite out here, it is also had some weakness. This little continuation pattern to the downside inside the composite will be a break of the low of Thursday, and that is at 38.55 in the market. The NDX 100 right now, NDX is trading off about 3 points, so not a big deal on its move down here just yet. The key continuation move to the downside inside the NDX would be a break of the lows of November 7th. That is the 33.18 mark. If it can break 33.18, that should bring into play the 32.28 range inside of the NDX 100. We go take a look at the ETF structure out here. Let's start off by taking a look at the SPY, the SPY. Yesterday, formed a little doji candle out here, setting up some resistance. Again, now that resistance here, when you got that little doji candle, that says it's the high of the doji or the previous candle. So in this case, it's the previous candle, which is 177.51, which was also a failure, I believe. That was 62 million shares testing the key reversal session that had 140 million shares. So we've seen a test of a very key area on lighter volume. Then a doji sets up resistance at that 177.53 mark, the high from November 11th. If that gets taken out, well then, okay, the market moves to the upside. It will have closed above a resistance area. Otherwise, what we should see is move down to the bottom of the rising price channel, the bottom of the rising sun, right around the 172.55-ish mark. That's your dead cat bounce. That's your 0.382 retracement. off of the last leg's low, October 9th, all the way up to the high that was put in, we'll call it here, the high would be 177.64, the November 7th area. That's what's going on inside of the SPY. Let's take a look at the Qs. The Qs here right now traveling at 82.45. No reversal session here inside the Qs. Yesterday we did see that doji candle session on November the 11th. That was on, what's today, Wednesday, so that was on Monday out there. In this case here, that says resistance area 82.64. Closes above 82.64. It'll go back and test its highs out here at 83.49. Otherwise, the break of the Qs, the continuation move to the downside, that'll be a close below Thursday's session out here, and that is at $81.37. That would set up a move down to about 79.08 in the market. Let's take a look here at the diamonds, the Dow diamonds. Yesterday, the diamonds here, there's our little doji style candle yesterday, coming at the top of the resistance line out here, that little diagonal line, red line up to the top. That says that, you had a key reversal session that said resistance was 157.80. Yesterday's doji candle says the high of yesterday or the day before, well, it was the day before, 157.73 out there. Looks to me like what the diamonds want to do. Well, the pullback here, dead cat bounce, 0.382 retracement takes to 153.66. That's in the cards. Maybe it's 151.10, the 0.618 retracement out there. Let's go take a look at and finish this off and look at the IWM, the Russell 2000 ETF out here. It just moving sideways today. No real importance of yesterday's candle out there. In the case of the Russell, the IWM, the real continuation of the downside is not just a break of that trend line. That's a trend line coming off on November 16th, but it'll also be a close below Thursday's session low, 107.14. Let's go to Max in Houston. Max, thanks for calling. Thanks for holding. How are you this morning?
I'm doing just fine, Steve. I have a question on the stock. The company is called Cameron, CAM.
Yes,
And it took a big dump about last month. And is that the beginning of an ABC down?
Let's take a look at it. So we're taking a look at ticker symbol CAM. Cameron International. It's had a couple of real signs of markdown in this equity. And the first sign was on July 25th when it moved down with 10 million shares, and then boom, you're right, the bottom fell out of this thing, but of course it was really all more volume off the highs, a second gap with 27 million shares to the downside. So your A point on this for an A to B equals CD down. Your A point I would use would be the October 18th high. Is that what you're looking at out there?
Yeah,
for your A
that's
point?
what I was.
Yeah,
that's what I was thinking.
And then your B point would certainly be the October 24th low out there. Now, with that being the B point and actually being the candle session low, it's going to be hard for it to. Can you hold on through the break, Max?
Yes, no problem.
Okay, we're going to go back out to Houston and Max. We're going to take a look at Cameron International, CAM, for potential A to B equals CD down. We'll talk about the importance of that volume bar on October 24th. Right now, Dow is off 72, S&P's down 3. Be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's down 74. S&P is off 3 right now. We're going back out to Houston to Max. We're taking a look at Cameron International. Now, during the break, Max, I put the weekly chart up on my screen out here. And are you watching this on Tiger TV? I think you're just listening in, aren't you, because you're at work?
Yeah, well, I tried to do that at my desk, but like the feed in the building is not all that good. But I'll
okay.
Look at the archives later.
Yeah, we don't want to get you busted out there, so we appreciate you listening in. Yeah. Now, what on the weekly chart? So when you're taking a look at potential AB equals CD down, short AB equals CD up, or what have you, what I always like to do, especially if you're looking at a daily chart, is at least also go up one level. In this case here, that would take us up to the weekly chart just to get a feel for what's going on. And in the case of Cameron International, what I've just drawn in here is a rising price channel that takes you back into the March of 2009 time frame. And what I'm using the open of that March 13th, 2009. That was $18.13, and then you've got a couple of co-located opens and closes that really match up. The June 29th that closed 42.71, or the open on July 6th at 42.57, or the open on July 13th at 42.65. Sets up a nice little bottom of the price channel. So with that move down last week, and with the volume out here, and on the weekly basis it was 47 million shares, price still held that rising price channel out there. And so that may be, it's telling you, it's a very long-term price channel out here. It's possible that's the extent of the move to the downside. So that's what the weekly is saying. Hey, it's up against a strong level of support. Not that they can't be broken, but you should know what the extent of the potential move is if you were trying to play this to the downside. And now when I go to the daily chart, the only issue that you've got with regard to, if you take a look at Tom's book, The Art of Time in the Trade charts out there, he likes to see the B point cross with volume. And that is likely going to be hard for this equity to do because of that 27 million volume session day on October 24th. Was that an earnings release or something like that?
Yes.
Okay.
Exactly.
So, big selling on that day, big emotional day, big volume out there. And if you do see a close below the 52.50 level, you're likely not to see that on volume. So what you could actually see inside this equity is a push lower, a spike lower, and still hold that rising price channel. A break of that rising price channel out there, that would send a different message out there. So that's how I would be looking at this. This might actually have some decent support now at that 52.50 level. Not enough to play to the long side. I wouldn't necessarily suggest that because it's got to work through the damage that was done a few trading sessions ago. Does that help you?
Yes, totally. And I really appreciate your help and your positive attitude too. So. Well,
thanks. I appreciate you listening and your positive attitude. Don't get busted out there, okay? Because we want you just kind of hide that. You got to get. Are you using one of those? What do they call those earpieces where nobody can?
I have a headphone that I set. I'm an engineer. I work for Cameron. Actually.
Okay.
And,
all right.
So I'm fairly new. I got laid off earlier this year, and I did find a job within 2 months, so I'm lucky. So. Oh,
good. Well, we don't want you to lose this one, so be careful out there.
No,
all right?
I sure won't. But thank
all right. Thanks for calling, Max. Appreciate it. Let's go to Elaine in Colorado Springs. Elaine, thanks for calling. Thanks for holding. How are you today?
I'm fine, thank you, Steve.
Good. You wanted to take a look at, is it ticker symbol CVD as in David?
Yes, Covens.
All right.
Had a good uptrend. I think I've been in and out of it twice this week, taking little bites. But is it worth it to stay in for a larger uptrend?
Well, if we take a look at this, it had a big key reversal session with some volume up at the highs here on October 30th. And so, that was a potential signal of a move to the downside out there. Let me just see how overextended this was. Take a look at the RSI. So, at the same time that it was doing that, it was getting up to that level. Now, you've been in and out of it, you said, a few times this month. So, you're using this as kind of a day trading-ish type vehicle, or?
Yeah, I would like overnight, one night kind of thing at most.
Okay. And are you?
What I'm saying is the major trend. Is it in a dip, ready to take another, bubble up there?
I'm going to put up a different chart. I've got to switch over to a different screen. Go ahead.
Now you're seeing what I'm seeing is you have that steady rise up. It's at a low point of a possible other, rise up.
Well, I'm starting to see selling pressure in this equity. Elaine, can you hold on through the break with me?
Sure.
Okay, great. We're going to go back out to Colorado Springs, home of Pikes Peak and many, many other things. Oh, the Broadmoor Hotel. What a beautiful place that is. And we're going to go back to Elaine. We're going to take a look at ticker symbol CVD. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading sessions specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 57 right now. S&P down a point. We're going back out to Colorado Springs. We're speaking with Elaine. We're looking at a company named Covance. CVD is the ticker symbol. And Elaine has, certainly picked out the trend, which has been a nice uptrend. If we take a look at it coming off the lows here in November of 2012, which is a great reversal area for the market in general. The low out there was 48.09. It's trading at 86.48 right now. Now, Elaine, from a trend standpoint, so during the break I did a couple of things. So what I'm first using, as opposed to the actual low of the candle session or the wick, is I'm using the body of the session. So that means I'm using the actual open of 48.59. It sounds like you actually also use trend lines or channel lines when you're taking a look at something, or are you just visually doing that?
I'm picking up some preset charts that are giving Bollinger Bands and moving averages.
Okay.
And I always look at the candlesticks and the volume.
Okay. And so on a moving average standpoint, is there a specific set of moving averages that you're looking at, or?
They're not in front of me right now.
Yeah, no problem. So when I take a look at that, what I like to do here is that when you get a chance and you go to a chart, take the open of the session from November the 1st out there at 48.59, and then what I'm then using here, just to give it as most amount of room as possible, is I'm using the open then of the session from October 9th, and to me that's really the maximum, to the downside that I would be using for, let's say, a channel line. And what's interesting about this equity here is it broke that channel line on November the 7th, did it with 370,000 shares, and it is now attempted on two separate occasions, yesterday and the day before, attempted to get back above that channel line. Now, it did it with 260,000 yesterday, 260,000 shares versus 370 to the downside. So what it looks like it's actually done to me, just taking a look at trend lines, because you had thrown that out there, it looks like what this has really done is really broken its trend line, and that says to me that what it wants to do is it wants some lower price. Now, the swing point, which is one benchmark to take a look at, is October the 9th, and that has 423,000 shares. The top is 85.03, the bottom is 82.88, and you were coming down towards it. You didn't get into it with 370,000 shares, moving into 423. So that's pretty nice. I would say your next buy setup might be on a test of that October 9th area. The other thing that you want to be really kind of focused on here and paying attention to still is that bar from November the 7th, because with that wide-ranging bar down, if you notice that you've got really what I'll consider to be smaller-bodied candles over the last 4 trading sessions as it trades into that area, a continuation pattern in this case here would be referred to as a falling 3 pattern, would be a close below 85.57 out there. So this tells me you had a key reversal session out here. That was a big signal that it was ready to change course, make a pullback, a retracement out there. You got that on October 30th. Since then, we've also seen some volume off of the top out here, October 31st. You saw some volume to the downside. You broke the actual trend out here. And if I were to try to put up Bollinger Bands, I don't personally trade with Bollinger Bands. I mean, I can maybe if we're using the same settings out here.
Fairly new at this, so.
No, that's okay. So I've got a 2 multiplier out here that I'm using in a 20-day. I think that's your normal default on Bollinger Bands. It did make it towards the bottom of that level, but I would be a little bit more concerned with I wouldn't be trading this to the long side until I would see a close above 88.34, and that's that November 7th session out here, and then that would also get you back inside the trend to the upside. So that would be my view on Covance CVD. But is there another question that you've got for me on it, or?
No, just a comment, because Tom O'Brien was talking about something the other day about this kind of uptrend pattern getting exhausted, which is why I made a phone call to you, because it was it didn't bounce back up on that trend line. So, yes, maybe this is that sign of exhaustion that Tom was trying to teach about.
Yeah, it's still a great-looking stock chart, so thanks for bringing that to all the attention of the viewers, listeners out here, because nice-looking stock chart. It hasn't really fallen apart. It's just giving you the signal that, you know what, it's tired, it needs to pull back, and so long as it doesn't take out the October 9th low with more than 423,000 shares out there, may still be what you'd then want to do is you'd want to see some kind of strength, some kind of sign of strength, maybe some kind of bullish reversal signal at those lows. But right now, it appears that the trend has changed on the daily chart, which is what you're using to trade off of on this. All right.
Yes.
Hey, thanks so much for calling, Elaine. Thanks so much for listening in.
Mm-hmm. Bye.
Have a great day. That was Elaine in Colorado Springs. That was Covance. CVD is the ticker symbol. Now, let's go see what these markets are doing out here. 1763.25 on the ES Mini. I'm going to go back and take a look at these 30-minute contracts out here. So what we see here with the 30-minute ES, it's trading into one of my favorite areas. That is the perigee line, which is at 1763.50. We can see this little descending price channel. It's trying to break out of it. We've got another 10 minutes in this session right here, so it's up against some diagonal resistance. It's up against some horizontal resistance, 1763.50. If we do see a close above 1763.50 here during this 30-minute session, that says, you know what, higher price. How much higher? I don't know. Let's go take a look at retracement levels. Let's go from the low to the high out here, or from the high to the low is what I should say, because that's what we're doing. We're going from the high out here at 1 o'clock in the morning. That was yesterday, and that was at a price level of about 17.69 down to the low that was put in as we came on the air down at 9 o'clock at 17.54. Well, you're really up right against the 0.618 retracement level. So it should be up against some very stiff resistance right here. And that is on the ES Mini. If it breaks above 1763, well, 1766 and even 1769 could be on its horizon out there. But right now, the ES Mini says that it's up against a resistance area. We take a look here at the NASDAQ futures. NASDAQ futures here just slightly breaking above that little descending price channel out here. It's been traveling in a 22-point consolidation. It does look to me more like the consolidation pattern is the one that is the winner here. That's that little 22-point range. So you got the NASDAQ futures here moving up towards its resistance line, and that's going to be right at the price level of about 33.65 out there. So if you're one that was looking for a place to trade the NASDAQ futures to the downside, that would really be about it. What you like to see here, it had a wide-ranging bar that always says caution Will Robinson. That's the one that took place between 9:30 and 10 o'clock this morning. So you want to see a couple of smaller-bodied, smaller-range bars here to tell you that, the buying pressure may be off, or selling pressure, depending on which way the direction the market is moving out here. But you want to see a few bodies out there, just not bodies as in bodies. You want to see a few bodies of the candles that give you the indication that, the move to the upside could be over. That's on the NQ out here. If we take a look at the Dow here has really still been traveling. Well, I still keep this 200-point consolidation. We had a false breakout. That took place there on that big move up on November 7th. That was courtesy of Super Mario. Price came back inside it and immediately moved down towards the bottom of that price channel. We saw another breakout here. That took place on the trading session, 4 o'clock on Friday. Volume wasn't too shabby inside of the Dow. Now what we've seen here so far in this trading session coming in at 10:30 was nothing more than a test of the top of that consolidation area. So if it can't break that up, and that was also the 0.618 retracement, the normal bounce that you would expect in the market. So the market should be up against some pretty stiff resistance out here. In taking a look at the futures contracts, taking a look at the intraday contracts. Speaking of an intraday, let's go take a look at a currency pair. Our friend here, the euro, Japanese yen, that broke that rising price channel. And that, too, as soon as we see a close below its 9 o'clock session at 133.23 out here. So you can see that what the euro did was it made that little bounce. The Dow or the futures contracts, they were dragged along. Now we see here on the intraday charts price moving lower. We haven't seen that same move inside of our markets here yet. But that is looks to me like that is yet to come out here. The question is just simply going to be where and when. So we took a look at normal natural resistance areas inside of the market a moment ago. Let's take a look at some of the other currency pairs out here as long as we're in the currency section. We're taking a look right now at the Great British Pound. It's still holding this consolidation level. We saw a bit of a bounce here this morning, so it is struggling to hold. I don't know if it's struggling. It is trying to just simply hold the low of the consolidation, which is right at about the 155.88 mark. If it breaks that, it'll make a move equal to or greater than that consolidation. Of course, if it busted up to the upside, then it would make a move equal to or greater than that as well. We take a look at the Queen, the Euro US dollar, then we'll go back. We'll take a look at the US dollar, Japanese yen. The Queen really running into struggling with the resistance area, horizontal resistance set up by the high of June 18th and the bearish engulfing candle on June 19th, as well as the high here from August 20th. So you can move the resistance area up a little bit. You can see it's really still in that range of resistance back below that area. Really says the euro looks more like, because of these wide-ranging bars on the way down out here, looks like the euro wants to pull back to 131.65, maybe 129.84. Let's go back and take a look here at the U.S. dollar, Japanese yen. Let's go see what that is doing. That is now has completed the 0.786 Gartley sell pattern. Did that yesterday, but no reversal signal here just yet. So if it can close, if we don't see a reversal signal, meaning some type of bearish reversal candle out here, then we'll see the U.S. dollar, Japanese yen move up into the 100.59 area. But it is in the range of a Gartley sell and a confirmation of that pattern would be a close below 99.14 today, tomorrow, something like that. So that's what's going on in the U.S. dollar, Japanese yen. Let's take a peek around the globe, see what we have going on out here. Here is the FTSE. The FTSE. This is the weekly chart of the FTSE. So we're only midway through the week out here. Of course, the FTSE should be coming to a close in about an hour and 15 minutes or so out here. You can see very strong resistance. It is not being able to break above its 2007 highs out here. That's that black line going across my screen. So the FTSE truly struggling out there. Let's go take a look at the DAX, see what it is doing here at the moment. Trading off of its session lows. That would be a little doji candle that it would form. Out here you can see the DAX here running into the top of the rising price channel, a 1 to 1.272, A to B equals CD on the way up, but no reversal signal really yet. If you stitch these two candles together yesterday and today, then you'd qualify as a bear sash candle out here, but no single reversal candle inside of the DAX. And that does not, if I double this candle, I can't tell. It looks like the shooting star is maybe a little bit suspect out there. Maybe that's a shooting star on November 7th. It looks a little bit suspect to me. It looks like that the wick might not be really twice the size of the body if I double that up. But that's just visually speaking. I don't have my glasses on. Let's take a look here at the Nikkei, the Shanghai. Let's go see what they're doing here. The Nikkei still just really traveling in that sideways consolidation, so not doing a whole lot of anything, just moving up from the highs of the consolidation, about 14,640, and the lows being 13,740. So you've got, when I say 13,740 to 14, so that's 1,000 points or so inside of the Nikkei. Interesting, it has 1,000-point consolidation, just as our Dow does. If we take a look at the Hang Seng out here, now the Hang Seng, this may have given a signal. Let's pull this back here. Hang Seng now looks like it has got the A to B equals CD down. Let's see if that's going to take it to the 0.618 retracement level out here. Your A to B equals CD down to 1. And so it completed last night a 1-to-1 A to B equals CD down, but it gapped down into it. I don't have volume on this, so I don't know if it was with volume. What I do know, even without having volume, is when you gap down into a D point, you want further price. In this case here, you want to hit the next level. And that next level would take you to 22,219. That happens to be 22,263 is also the 0.618 retracement level. That looks like that's where the Hang Seng is headed to. We'll probably head there tomorrow. If we take a look at the Shanghai out here, the Shanghai looks like it closed below its most recent swing point low, which was from October 29th. That was at 2190. It closed at 2185 last night. Beautiful hammer candle down here. Boy, that's a beauty. That's from June 25th out there. If we go from the hammer low up to its, I got to grab the right tool. Let's grab the retracement levels, fib levels. If we go from our hammer low all the way up to the high that was put in on September the 12th. You can see it's now closed below the 0.382 level. It says that 2104 is next in the cards for the Shanghai. Let's take a look at Goldilocks, see what gold is doing as we speak right now. Gold yesterday just slightly closing below the trend line. That's the trend line I'm using. The low of the trading session from June 30th. And the low of the trading session from October 15th. You're seeing it's just trying to hold its trend, because if it doesn't, well, if it can take out the swing point from October 15th, that price at 12.51, it'll go visit the June 30th area, somewhere between 11.79 to 12.48. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow down 46 points right now. The S&P is nearly flat. The NASDAQ is up 3 points. Russell 2000 up 83 cents. NASDAQ 100 up a couple of points. New York Stock Exchange down only 5, so that is nearly flat. And it will be amazing to see these markets, how resilient are they? But it's going to be amazing to see what is it when the air gets let out of the tires out here, because, you know, there's enough divergence out here that has led to prior market declines, enough signals out here that just have to say, man, there is some distribution going on up at these highs, and if there is some markdown, it's going to be quite a jolt out here. You know, the chart I've got up on my screen is the S&P 500. That's what you're seeing up at the top. It's trading right now at 1767. The bottom of the screen is the Euro Japanese yen here, and I've identified the areas where we have divergence, and it's really important to be paying attention to the both sides of the screen out here, but the divergence. when you take a look at the Euro-Japanese yen, divergence has resolved itself in the direction of the Euro-Japanese yen. And we've got that going on most certainly right now, because if you take a look at the highs that were put in back in October, you can see we're up at that level. You can see that's the red horizontal line really going across my screen up here during this time period, where at the same time as we take a look at the Euro-Japanese yen, it is pointed downward. And that says that this will resolve itself. Doesn't tell you how far, but it tells you that it should resolve itself to the downside. And that's not the only area of what I'll call divergence inside the marketplace. The other larger area of divergence in the marketplace, that most certainly is inside the New York Stock Exchange. And if we go take a look at the New York Stock Exchange here, you've got the oscillators. The summation index was down. That means the oscillators are below zero out here. So that is telling you that it's struggling. We still have net declining issues here this morning, 133. In fact, let me see if I can pull up my spreadsheet here real quickly. It's like 20. I can switch over to this tab. And so you'd need 2,185 net advancing issues today in order for the bulls to take back control. So the longer that this takes, the more that we are up in this thin air out here, the bigger fall, the quicker fall, I suppose I should say, is what we will likely see out here in the market. So there's enough to be concerned with regard to the divergent patterns that I see out here in the marketplace. So let me just refresh the chart out here. The other thing that's interesting, let me just do it, maybe if I do it this way. That didn't work, did it? Let me try this. Oh, that didn't work either. When I take a look at the summation index, it has been, I have not tracked the summation index for the most part in rising price channels, but what is interesting is the bottom line, the blue diagonal lines that you're looking at. That's a little rising price channel of the summation index, and you can see that broke that a couple of trading sessions ago. So just be careful out there. Make sure you use stops in place. There are enough signs out here that absolutely do say caution, Will Robinson. Now, if we see a break inside of the U.S. dollar, Japanese yen, if this pattern here does not hold, which right now it looks like it's got a piercing candle already formed, which is a bearish reversal signal, and this is signaling to us that the Euro-Japanese yen continues to want even lower price out there. It says it wants to make a 0.786 Gertley buy pattern in the 129 range out there. So that's my call, just like the call earlier this morning at 9 o'clock when I said, hey, don't jump on the short side. This market has to work off its overbought condition out there, or oversold condition. That's what we've seen. So, folks, stay tuned. Basil Chapman is up next. After Basil, we've got our man Larry Pesavento, Daryl Martin, David White, the Andy Hecht. Now it's Wednesday. The Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. I look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.